Welcome, traders from around the world. It's Friday and it's our 13th trading battle, so anything can happen today. It's going to be a wild, wild day. Today, we have two Chris's with us, Chris Pulver and Chris Guzman. So just like in grade school, we're going to refer to them as Chris P and Chris G all throughout the show to make sure you know who I'm talking to. And I'm very, very excited to have both of them. They have very different approaches and attitudes towards how they trade. Let's say hi to everybody. Chris P, say hello to everybody. He is
Hello,
a returning
everybody.
champ and a great French bulldog aficionado. He's got a great dog too, and a golfer extraordinaire. And then we have our Jersey boy turned London gentleman, Chris Guzman, who is more of a long-term trader and got some very interesting approaches to how he trades. We're going to look at charts. We're going to look at trade ideas. We're going to discuss markets. Very, very excited to have everybody here join us today. It's been a relatively quiet opening session in global markets all across the world. We've been sort of relatively low volatility because I think the markets obviously are all anticipating the FOMC meeting next week. But despite that, there's still going to be some really good opportunities for us to take advantage of today. So we're going to get everybody involved right away. So putting everybody into the hot fire or to the hot coals, I'm going to start with Chris P. I need, starting, your best short-term trade that you're looking at right now, given the state of the markets ahead of the New York Open. What do you think looks great to you in Forex or anywhere else?
Yeah, right now I'll just stick to a short-term Forex trade. I like Aussie yen and CAD yen long right now. I'm only going after maybe 10 to 20 pips. Really, I'm just looking at real-time strength versus weakness. We've essentially had weaker JPY since yesterday, and it's been pretty sustained. Plus, I mean, you look at a big pop in the dollar yen. I've been long dollar yen. I essentially have some robots, as you know, Boris, that are long Aussie yen, like buy only. I just feel like right now, looking at the Nikkei 225, looking at the stock market, path of least resistance, looking for some pops as we had some of those JPY strengths earlier. So I'm looking Aussie yen long, CAD yen long for right now, just going real-time strength.
And of course, we got some really nice tailwind yesterday from U.S. retail sales, which were much, much stronger than anybody anticipated. Dollar yen really responded very well to it yesterday from 109.60 all the way through the 110, and actually trading 110, a little bit above the 110 handle as we speak right now, or 110 figure as we speak right now. Sorry, I need to get my spot methodology properly. Handle as a futures term. But anyways, if dollar yen stays above 110, those Aussie yen, CAD yen trades should really perform well as the day goes by. So that's what we're looking at right now from Chris Pulver. Chris Guzman, my friend, what are you looking at as your short-term trade when we start the session?
Good afternoon, Boris. So I'm looking at short-term dollar weakness, as in very short-term dollar weakness, as in today dollar weakness. And so I'm actually going to look to buy. I'm going to look to place a buy across pound dollar, euro dollar, Aussie dollar, and New Zealand dollar.
So you're going to be short dollar all across the board. Aussie,
that's right.
Pound, Kiwi, and what was the fourth trade?
Pound dollar, euro dollar, Aussie dollar, and New Zealand dollar. I want to buy them all.
The full Monty. You're gonna go all across.
And then I also want to go in a little bit harder on that bet. I want to go ahead and short pound New Zealand and pound Aussie simultaneously.
Okay, so essentially, so what makes you so bullish pound this early morning time?
It's not so much the pound for me at the moment. It's more so the dollar. What we're seeing on the dollar. If you look from the weekly perspective, right, we've got this overall long-term range, right? Can you see that range there?
Yes.
And then down at the bottom of the range, we're seeming to form this head and shoulders pattern. Very clearly defined neckline, a break of the neckline, and then two subsequent tests.
Right.
Now, if you look, Boris, the last time we broke and then tested here, you could see the break, the test there, and then we left behind a piercing line. And then a rally. So, what we're seeing here is a very similar phenomenon, right? Where, we rallied, came back to test again, and right at the broken neckline there, we found support, left behind a piercing line last week. And so heading into this week, what I said to my students at the start of the week was, we should anticipate a test of the piercing line, which is exactly what we've seen happen here.
Right.
But then if the market never closes beyond the 50% mark of the candle in question, then what I teach is that the candle is likely to hold, or the formation is likely to hold. And so that's exactly what we're seeing here. We didn't get the close. Instead, we get this rally. And so as far as I'm concerned, this piercing line has now pushed the market back into this range that I'm looking at here, this long-term range. Which, by the way, this range, the dollar index has been bouncing back and forth between support and
Right.
resistance here, going back to February of 2015, right? So, I'm very confident in these levels here. So, as far as I'm concerned, head and shoulders right here, down at support, and we're getting a break back into that range, and so you can even see the outline there. I'm anticipating a rally test and then a continued rally
So,
up to
so to
resistance.
clarify, this is a longer term view, which
Correct.
is bullish dollar from a technical point of view. You seeing a consolidation, inverse head and shoulders, breakout, confirmation of that breakout, and so forth. Nothing technically is swaying you from staying long dollars on the intermediate term basis, right?
Correct.
However, on a very, very near term right now, just sort of like, I guess, on a scalp basis, you're seeing some dollar weakness, and that's
Yeah.
why you have this full array of short dollar trades.
Absolutely. Yeah, that's absolutely right. And what I'm looking at here, Boris, is a potential move back to test this trend line on this 2-hour time frame.
Right.
Potential move back to test the uptrend line there, and then I would anticipate a bounce, there. But I do
Okay.
see plenty of room to the downside here. Plus, as far as price action is concerned, right here at resistance, we've got sorry, a dark cloud cover at a brain freeze there for a moment with a test, and so far it looks like that is indeed holding. So that's why in the very short term, that's why I can't stress it enough. In the very
Right.
short term, I'm dollar short, but
Right.
medium to longer term, I'm bullish on the dollar.
Now, can I ask you a question? When do you trade? You generally trade sort of on a intermediate, longer term perspective, right? Do you ever do intraday scalping trades?
Yeah, so it would surprise you to learn that I actually do a lot of scalping. I
Okay.
actually predominantly do scalping, but I always give I always give my short term, medium term, and longer term view. I don't just kind
So
of give the one
so
and then.
are you one of those people that can hold two diametrically opposite concepts in your head? In other words, that you could hold you could have a longer term position that's bullish dollar with much wider stops and smaller, let's say smaller size, and then be contrary to that and kind of scalp against that. Um,
Yeah,
yeah, yeah, that's
absolutely.
actually it's a super interesting strategy, and many floor traders from years ago, like in Chicago Mercantile Exchange, used to do this all the time, where they would have a core position that would be one directional, but they would actually trade against that position. And one of the advantages of that is, of course, um, if your core position is sort of not working or maybe just a little bit underwater, all of your short term trades are actually making money and paying for you to wait. So
Exactly.
it's a sort of
Exactly.
an interesting methodology to go that way. Yeah. Okay. How are we doing on our trades? We're slipping a little bit on the yens. I haven't seen Aussie yen, Kiwi yen. We're a little bit just pretty much flat, right? Where are we at?
Pretty flat.
Um,
I've got chart alarm set. I'm looking at about a 20 pip area. I'm trying to if we get up to, close to 10 pips of profit, I'll go break even. But I'm essentially looking to cut it off at 20 pips. If we're upside down 20 pips or so, it's not worth hanging on to. I'm looking pre-market, Boris, at, SPY pre-market is down. Dow pre-market is down. Q pre-market is down. So we might have some, we've seen that actually the last 2 days. A lot of risk off in the morning, and then we've had this kind of miraculous afternoon rally. So things have been pretty flat for the most part this week, but it's been
yeah.
pretty much an afternoon of risk appetite, or just fighting back
Yeah.
essentially off the recent slide.
What's up with that? Let's talk a little bit about that, because I
Yeah.
know you're a big volatility follower, and I always
Mhm.
love to get your opinion on volatility. We've seen compression pretty much across everywhere, but certainly one of the markets we're really seeing a lot of compression is in crypto. I mean,
Yes.
just less than a week ago, Bitcoin had a 20% move, and like last 3 days we've had like a. What do you think
Right.
is happening over there?
Well, I mean, I'm just, let's talk from the technical standpoint. I mean, you can see all these little dashed yellow or these orange lines on my charts. Those are all alerts. I mean, essentially, I'm a crypto bull, and my participation in my coin portfolio is just looking to buy good levels, be as bullish as possible over the next probably 5 to 10 years. But
Right.
I'm curious, like, you know, I think that there's a big waiting game of like what's actually going to happen with acceptance, with legitimacy. And I mean, since we had just kind of the Chinese tech crackdown, and we've had some investor plays, but like, you know, the big rumor this week on Litecoin. I don't know if you saw this. Walmart was supposedly going to start allowing Litecoin as like a form completely fake. And so it was
that was an excitement for about half an hour, and then we all died out.
The thing is, I was actually in one of my live sessions, and I'm looking across the board at my cryptos, and usually it's like 10 to 12 coins that I look at. I'm like, how is everything down yet Litecoin is up by a lot? And then sure enough, later on that day, Litecoin is all the way back where it started. So clearly a fake out there. But honestly, all I'm doing week to week is just setting chart alarms. We haven't breached any lows. We haven't breached any highs. So I'm really just waiting. If I do look at the technicals though, you know, I am thinking that we end up having a high, low, lower, high, lower, low first.
Interesting.
Here on Bitcoin back to 37.5. You know, I think that there's a lot of interest to buy on sale. So, I mean, you're going to see aggressive V bottoms. You're going to see aggressive, you know, interest. But Boris, I would love to get Bitcoin back to 30. I don't know if that's going to happen. I don't know if there's just so much buying interest and it'll never get there. But, you know, my position sizing in this recent 2021 low was way smaller than it was when I first started participating back in 2017 and then heavy in 2019. So I'd like it to dip. I'd like it to correct. I'd like to see if we have, you know, this base here with the swing. We're coming back against it a little bit. Let's find some efficiencies. And from there, like if we get back to 40, definitely long on Bitcoin. And I think that would follow what's really been interesting for me is following, you know, your kind of major coins like Bitcoin, Ethereum, Cardano's been like outperforming both of them this year. And then you also have altcoins. And I'm not a big altcoin trader. You know, like I said, my portfolio is like 9 coins. But I work with some people that's what they're doing. Like they're focusing on these like loop rings and the Shiba Inus and these little pops of like, if it jumps 30, 40%, just take it and go. That's not me. I'm not scouring. I mean, I've got too much assets and stocks, options and Forex to be jumping in and kind of, you know, gambling, if you will, with some altcoins. But I am interested in the bullish picture long term.
Okay, so just
to follow some stocks too that reflect that.
Just to summarize your analysis of Bitcoin, because that's really the primary asset that I think everybody is interested in. So 3750 would be your first level of dip buying,
absolutely,
and then sort of and just to understand how Chris buys, which is a really interesting methodology, and I've kind of stolen it from him for short-term trades. This really works very well. Is he's a scaled down buyer, so he'll buy a small piece at level 1 at 3750, perhaps a little bit of a larger piece at that 30,000 level, and then a really significant piece at that 20,000 level. And then he will wait. Now, what's interesting is that he won't add any more until the price action reverses. Then if it reverses and he's gotten sort of a nice steady position, he will then add to his position and kind of add to winners. So first he kind of adds modestly to losers, and then he scales up, adding to winners. It's a very unique and very interesting.
Can I show an example of that? Can I show an example of that right now? I just I'm trying to get an update here from IFX book because I did close the dollar Swiss up with some profit this morning.
Yes, I was going to ask you about
but
that.
I'm going to go dollar Swiss. Yeah.
Yes.
So just to go what Boris is talking about, this is a perfect example. I mean, I can walk you through the entire year, but basically, you know, this level, just like Boris said, I was leveling in, you know, spacing out my trades early on. Once I had better confirmation of this aggressive trend line, we had some heavy divergence. I had about 3 or 4 positions in early, and then I had about 20 positions in on that run. We had a nice little Fibonacci swing from low to high. Let me go ahead and get rid of my drawings here. So low to high swing, I started getting back in around that 50% level. And then I started scaling myself back in, looking for trend line breaks, looking for a bit of a falling wedge. I started to add heavy. Now, I am still looking for dollar Swiss to continue up towards 9,600 to complete my technicals here. But what I just have been doing is, because we've been kind of sideways, I'm wondering, okay, so we have this swing here. I'm looking for the finishing line up to 96, but we might have some sideways ranges where we go, let's say that we hit the high today and we come back down. Boris, I would be very happy to see that I took some profit today and then be able to get back in this range and take the same thing, take some profits here. If it runs, I'm still going to have a remainder running long. Yep.
So can I just ask you mechanically, is it a 50 pip, 100 pip, 75 pip? What are the gap levels that you generally work with in your accumulation, and then what are the gap levels you work with when the things goes your way and you start doing buy stops against it? What are the how do you pace it out? That's what I'm curious about.
Yeah, so the pacing typically would be, technical levels that I'm really interested in. So I'm using a lot of price pockets. I'm using a lot of, I'll look at Fibonacci's for major swings, but for the most part, I'm just looking at big price pockets. Like when I was getting back in on this pullback, if you can see my mouse here, we've got this really nice Fibonacci, like 50 to 61% area. There's some nice gapping there in that candle. So that's where I kind of started. And then when it comes to the scaling, I'm essentially using like the daily trading ranges. So, volatility for Forex has been relatively quiet. We have roughly.
So can you give me the general number, Chris? Just give me a general number for people. 50
let's say 50 pips around the average. But then when it comes to scaling in, when I've got confirmation I'm going my way, I'm usually 15 to 20 pip spacing, stacking. I get pretty aggressive on that stack.
Got it. Okay, that's what I wanted to know. Thank you. Okay, let's move on. We got to move on to our challenge 2. Challenge 2 today is
Boris, before we do that, can I just would it be possible to call a couple more trades here for that first challenge?
Yes. Is this? Are you calling for your challenge 1 trades? Or challenge? Okay, challenge 1 trades. Go ahead. Talk to me.
Sorry. It's just finally lining up for me. I'm looking to short silver, and I'm looking to short gold as well, please.
Okay, awesome. So Chris G is going short silver, short gold on the metals. I am super bearish with you on there. I want the thing to go down to 0 because I'm holding long term put spreads on that. But so I'm rooting for you on that side of it. Okay, guys. So let's reorganize ourselves for challenge 2, which is we're going to go across basically a range of assets. 1 crypto, 1 Forex, 1 stock indices. Give me 3 trades, 1 trade in each particular asset. We're going to hold it for 10 minutes. What's the best hold for the next 10 minutes across those assets? I'm going to start with Chris G. Give it to me, baby. So you could almost say we could even use that gold silver as like your one instrument for that. But now I need a Forex trade and I need a crypto trade from you as well.
What you need another Forex trade for the next 10 minutes?
Yeah, like what do you think is going to be a good range trade? I'm counting gold. I mean, you can count gold as a Forex trade if you want. That's fine. But then I need 1 crypto trade and 1 stock index trade if you want to do that.
All right, so I'll hit you with some cryptos. This is really pulling me out of my comfort zone here, but I'm going to do it. Why not?
Okay. That's the point of the trading battle, my friend.
That's it. Let's do it. I'm up for it. I'm going to buy Ripple.
Okay. Ooh.
For the next 10 minutes.
Okay. Right.
And then you said you need an index as well, right?
I need an index.
Ooh.
All right. Buy NASDAQ. Come on. I'll make a trade for you.
Hey, that was mine.
I'm actually looking at NASDAQ. I'm actually contemplating NASDAQ.
All right. So I'm putting you into the trade. You have no choice.
All right. We're giving them NASDAQ.
Can he do that? Where's the producers? Yes. Can Boris do that?
Yes, I am. I have full authority. When you trade with me, I'm the benign dictator here.
Producers are telling me you can't, Boris. Sorry, mate.
Oh, really? They don't know. Good. So, what do you think of the stock index? What's your next trade?
I think I'm gonna go. I'm gonna short the NASDAQ. I'm shorting a dark cloud cover on the NASDAQ.
All right. So you short NASDAQ for the next 10 minutes because it is a little bit overbought. It's had a nice big run, about 30 points in the last half an hour. Okay, Chris P, my friend, Forex, crypto, indices. What do you got for me?
All right, let me come to Forex last. I will do. Can we get Avalanche for crypto? Let me know. I know it's kind of a rarity, but let me see if we can get. It's AVAX is the ticker on that one. Okay. I want to buy Avalanche.
Okay.
See if we can get that one.
We have it. He says they got it.
All right. That'll be my short-term buy, AVAX.
All right.
And then I will go. I'm going to take the opposite. I will go long S&P and I'll go long NASDAQ. If we're holding for 10 minutes, I'm going to see if we can keep pushing into this pre-market.
All right, looking good. Look, I love the opposite trades. And then just one last thing, which I need a Forex trade from you.
Okay, let me find a Forex trade here. Let's go Euro Aussie short and Euro CAD short right now.
You're a cat short. You're Aussie short. A little bit. See, you're gonna go long com dollars. Interesting. Okay,
Yep.
I like that. I like that. Okay, let me see how that's trading on the 1 minute chart. Yeah, it looks pretty weak. It's
Yep.
underneath the levels. It's almost near the day's lows and days highs. Okay, all right, that's interesting. So we're gonna let those trades go. Should we take a look at the dashboard just to see how challenge one trades are doing right now? If we've had any movement, let's see what's going on over here. Got a lot of trades on the board here. Okay.
Yeah, Guzman's just shotgunning out there.
Yeah, just shotgunning it. That's it. It's spray and pray. There was a so who's we got so many trades. We have to go to two levels.
Oh
but
boy.
overall, I'm
Page
gonna
2.
I'm gonna let the producer summarize it for me. I see a lot of positive trades. So you guys have really been doing great. You've been picking a lot of good ideas. So I'm gonna let the producer summarize it for me, and I'll give you a intermediate mid day feel for where everybody is at and how we're all doing. But now, I actually want to ask both of you guys a non-trading story just a little bit for right now. There's a crazy background story between the two of you. You guys known each other for quite a while, and one of you worked for the other one, and then the other one worked for the other one. Can you just tell me, how did the whole story happen of how you guys met, and how did you guys flip roles back and forth here?
It wasn't like a role playing thing or anything like that. It was.
Okay, that's not what I meant. Yeah. Okay.
Yeah, Chris Pulver and I go way back, man. It's great to see you, Chris.
Yeah, it's honestly, it's what, 2012. That how far we go back?
At least I'd say.
Yeah,
it sounds about right to me.
So yeah. I'll share my side in early 2012. Boris, I first learned Forex. It was 2008, 2009. I was in the golf business, as you remember from the first battle and getting to know me a little bit. So I was in the golf business. One of my clients was a full-time currency fund manager, and I was trading with him. We're day trading only the euro dollar, 3 hours a day, 20 pips a day. That's all I did was short term. When I came back to the States, I essentially I had the nest egg built up. I planned on trading full time. I had a few years of expenses taken care of. And I actually started exploring some education options because, I felt like I was a very one-dimensional trader with this. Even though he was a professional, he was getting audited at the time. And so he kind of was like, look, man,
that's never good.
Yes. So it wasn't a good thing. But so in that downtime, it's like I just started to explore because I was, I thought there's got to be more to this. And plus, I had met somebody that traded on a completely different level than he did. This is a guy that trades 1 minute charts versus a guy that talked about shorting the euro dollar for the last 6 months and made like $1 million. That's kind of the guy I wanted to be. So I started to explore, coaching, one-on-ones, different higher time frame strategies, like using Forex as an investment vehicle. And I ended up stumbling upon Market Traders Institute, which I had old, DVDs back in the day, or CD-ROMs. That's how long ago that education goes back. Yeah. So anyway, I ended up coming to Orlando to do a class there, and an in-person class. And I happened to, I met with Chris. I think we met over lunch afterwards, talked about it, and he ended up bringing me on as an analyst. And so, of course, in true kind of hazing fashion, I got put in the London session to work at 2 a.m. to 7 a.m. for the first year. But that's what I did, and I loved it. Yeah. So so that was our kind of the tale as old as time. Yeah.
That's a wild story. So what's interesting here is that I think it sounds like both of you guys are very, very comfortable trading short-term and long-term. But with Chris P especially, really, I get the feeling with you, Chris, the bulk of your money is made on longer-term positions. I'm in talking to you from the past trading battles. You've told me that you've held, you've shown me trades that have lasted for months on end. That have been. Would you say that the longer-term trades are like the vast majority in terms of percentage of your yearly gains? Is that where most of your real big profits come from?
Yeah, that's where I get my biggest cash injection from, is when I'm sitting and holding and building. I would say, if I'm able to produce a 15 to 20% year for my fund or portfolio, I would say about 12 to 15 of that is going to be these positions that I build and sit on. And then the rest, is I have a lot of robot trading. Sessions like this where it's like I'm trading all the time live in front of students. So I'm never afraid to take trades. But, I also I want to make sure that what I'm doing is like, even if I experiment, even if I dabble and I trial things, that I'm not moving away from my bread and butter. I'm not moving away from what has gotten me to the point where I'm a consistently profitable trader. And that is mostly positions. But like, what's been helping me a lot the last several years and what's allowed my profits to get bigger while reducing my risk is really adding aggressively when I have everything aligning and going my way. So it's been, that evolution I've been trading Forex for 13 years now. The last probably 5 or 6 years heavy has been adding to those winners. And that way, when it is worth it, I think this year, dollar CAD, Euro Swiss, Aussie New Zealand, Euro CAD, Pound CAD, I've had trades that were, $50,000 in profit, $100,000 in profit. I have to sit on those, but man, it's worth it to have those big cash injections.
Yeah, no, it's amazing, and and yet you've been superb on your short-term picks as well, because you are the reigning champ of the trading battle. You've won the last 2 stakes, so this is a high stakes episode for you. Now, Chris G, how are you relative short-term versus long-term? What would you say the percentage distribution is between your longer-term positions and shorter-term positions? Is it more balanced, or do you also tend to make more money out of the longer term positions?
So I actually am more sort of week to week, where I don't Monday's the start time, Friday's the end time. Next week is a new week for me. I do a lot of analysis in the longer term. So I give my short, my medium, my long term with everything I do. But in terms of actual trading style, I'm a week to what would you call it? Intra week, I guess.
Intra-week trade. Now, can I ask you a question, guys? This is an interesting debate that goes on in trading all the time. Do you set a weekly target for yourself, or do you find setting targets is totally counterproductive? Chris G first.
Yeah.
So I do set a target, but what I'll do is I'll say sort of like a minimum threshold for the week, right? And I'll say I want to look to earn this much this week, so that if I hit that, it sort of it gives me like a small win, if you like, it's a sense of accomplishment, and then whatever happens from that point, happens basically. But I've at least achieved that target.
Interesting. Okay. Interesting.
I'm a very big proponent of treating trading like a business. So
trading like a business. Okay, I'll hold off on your answer, Chris P, because it's a really fascinating question. Just want to update a little bit. What are we doing? So, if the producer can tell me who's won, it looks like. So this is Guzman.
The yen, you turd.
Pulver minus 257.
Yeah, the yen's
Guzman
not cooperating.
is minus 107. Looks like Chris G's won the 10-minute hold round with less negative numbers, but that's to be given because you're trading spreads and everything else. It's but Chris G seems to have won round 2. Let's go on to round 3, which is very much in sync, I think, with both traders of like what's happening next week. The best trade we have FOMC next week. We have clearly some interesting catalysts all across markets. What's the best looking trade stepping into Friday into next week? What do you think? I'll start with Chris G first, and then we'll go to Chris P. Go ahead.
Yeah, so for me, it's all about the dollar again. I've been tracking the dollar pretty closely here, and what I'm looking at on this weekly time frame is this long-term consolidation range, where we've got the market since about February of 2015, just very range bound, right? Caught in between the support and resistance here. I've got a pivot point at 93 even. So the only thing that really concerns me is that pivot point. Obviously, I'd want to see a break above 93 on the dollar index in order to get more confident in buying. But I mean, if you look,
just for people who see, because it's a little bit hard to see on the screen, 93 would be where? Just on that chart. Can you just mark it for us? So
can you see that blue line right there where it says weekly / daily pivot?
Yes.
That's actually 93.
That's the break
there.
You're looking for.
We're right on it.
Now, would that are you looking for a break on a weekly close or a daily close?
So ideally on the day, I wouldn't need to wait for the week because what I'm doing is I'm basically using the week to kind of set the game plan for the week ahead, and then but I'm only ever looking at it sort of at the start of the week and the end of the week. The rest of the week I ignore it.
So
So
if this closes above 93, that makes you considerably more bullish.
Yes, certainly.
Got it.
Certainly.
Got it. Okay.
There's a couple of reasons for that. First of all, 93, like I said, is my pivot point. So a break above would, indicate strong bullish potential to the upside. We have that long-term consolidation range that I pointed out. So, if we do manage to break above, then I'm definitely bullish. I can see long-term going all the way up to 99.
Right.
But, I also see here a couple of things. So first of all, we have, right down at support, we had this head and shoulder, this inverted head and shoulders pattern here, right? Left shoulder here, head, right shoulder. There's my neckline. There's the initial break. So there's break number one. Test number one, the test failed, i.e. the bears tried to bring this back down. They weren't able to, right? We had a piercing line left behind and then a rally. The market then came back to test the neckline again, almost perfectly. You can see almost perfectly here, right? And then we got another piercing line. And so, last week heading into this week, what I said to my students was, I'm looking for a test of this piercing line to sort of kick the week off. But then around the midweek point, assuming that the bulls are still going to be in control here, I should anticipate that the piercing line will hold and the market will start to rally. So you can see that's exactly what we're seeing here. I think, there's, like I say, though, in the short term, I think there's a ton of resistance there, plus the fact that there's that pivot. So, I mean, I'm just super cautious heading into next week. But if we manage to get a break above 93, then I'm very bullish on the dollar.
What would be super bullish, I think, is let's say the Fed is just neutral or even perhaps even dovish, but the market acts positive. Like if the news is positive and the market acts positive, that's sort of conventionalism. But if we get sort of like a dovish Fed and the dollar does not sell off or does a little bit of a sell off and then comes right back and roaring back, that would be a super bullish construct because it would say the market is really done with dollar weakness and is going to anticipate tightening sooner rather than later, irrespective of what the Fed says. So that could be an interesting play into next week. What about you, Chris P? What are you thinking of on a longer term basis? What are you looking at?
Well, I was just gonna piggyback off of some of that narrative on the dollar because one thing I have been looking for timing wise is a rebalancing, a little correction coming in the S&P 500 and the NASDAQ. So I'm looking at the SPY. These bar counts are obscene between, and one that sticks out in particular. Looking at Microsoft and big tech. I mean, look, Microsoft's a fantastic company. They've had this, explosive exponential growth, but I'm just looking at balancing. I mean, this is ridiculous. We're now in a daily chart at 370 bars from any type of balance. So that looks essentially.
Sorry, could I stop you right there and explain to our audience what you mean by being away from any kind of balance? What is balance?
So for me, I use the 200 exponential moving average. And historically speaking, I've only seen bar counts get so far away before they balance. So as an example, Tesla had a pretty ridiculous run. And you can see how, when Tesla was, after we had so pricing here reflects that 5-to-1 split that happened last year. But you're looking at these automated trend lines, this 200 EMA, and you can just see that percentage wise, we move so far away from it. But also bar count wise, we get to 200 bars. 200 bars is, historically speaking, on a daily chart, that's where I'm looking for tops to form. I'm looking for bottoms to form. I'm looking for extremes in time, on time.
So just to understand in plain English language, there are 200 bars that were above the 200 it's EMA, right? Exponential moving average.
The exponential moving average, correct.
That traded for 200 straight days, it traded above, which is an extraordinarily overbought condition, and obviously brought in a correction. And now what you're saying, looking at the S&P, using that sort of analysis, how many, or Microsoft? We're looking at Microsoft as a component of the S&P. What were you looking at to do? So you were saying how many bars are there?
So the Qs right now are at 364 bars. That's over a year. It's a year and a half plus overextended. Right. And so going into the narrative of the dollar, I don't know if the Fed or any central bank right now is willing to actually say and put it in writing that we're going to raise rates. They'll talk about it. They'll get free mileage out of that narrative. But I think the market is concerned that the Fed will taper. But all we keep seeing here is 2 to 3% corrections are bought aggressively. And so what I'm watching really carefully is I think the S&P is due for a correction. My calculations, again, this is all conservative correction stuff, 7 to 10% in the S&P and 9 to 12% in the NASDAQ. Now, I would like to see that as an opportunity to buy the dip, but there's this interesting, kind of overextension, don't rock the boat, path of least resistance. And if the stock market continues to stay stretched and stretched and stretched, then I feel like we will push this all the way into December or January, February of next year. And it will look a lot like 2017. 2017, the exact same thing. S&P 500 did not have a single red month for the entire year. And I think we can keep doing that just because that's the environment.
And then we had a
20% correction in February. Yeah.
Right. Then we had a Volmageddon. Yes.
So back to the dollar stuff. I could see dollar strength if we actually see, like today, you see that the SPY is pre-market down, just shy of $2. We've been fighting all week. We've had these, pre-market slides. They push up for the afternoon. If we end up failing, my concern with the slide lower is that will help the dollar. That'll help dollar strength. That'll help yen strength. That'll be some risk off flows. What we haven't done in the last, 6 months is take out any previous support. And so if we slide to this level and challenge it, we might be talking about a head and shoulders pattern. We might be talking about the correction area. And that's how I see this playing out, like high, low, lower, high, lower, low, find my corrective area, find that balance. And then let's see what Q4 is made of for a buy. If we don't get that and this keeps extending, then this is delaying the inevitable, kicking the can down the road. And then this still comes back, Boris. This still comes back and we'll find that EMA. Maybe it's 4 months from now. Maybe it's 6 months from now. But it'll just be like, that came out of nowhere. But really, it's been all premeditated and it's just something I've been watching. So I'm cautiously bullish on the markets. And if we have any risk off flows, the Fed could certainly deliver that, but I don't think they want to. I don't think the Fed wants to do anything to take blame for why the markets would drop 7 to 10% or higher.
But my view on this, and this is just my 2 cents on all this, is despite the fact not wanting to, I think the market is tired and it's going to sell off. I'm starting to build put spreads in the QQQs with
Same
like
here.
3 months.
I bear call spreads.
60-day duration. And just kind of rolling them in small size. I'm doing a Chris Pulver in my options, small size until I get right, and then I'll size it up into a big size. So let's I got to tell you, summary of where we're at. I am sorry to say, Mr. P, that this is the first time that you are getting your fanny slapped.
I get licked, huh?
Guzman is doing so well. His gold and silver trades, which has been monster. He's up like 173 on the last count. You're down 384. What's hurting you most is your S&P and your NASDAQ. Chasing NASDAQ is always a tough bet.
Sure.
And Guzman's call on being short NASDAQ was right on the spot. He really top ticked the top tick on the move. So that was very, very good. So that's where we stand right now. But of course, the trading battle is not over until the longer term trades also materialize. But for now, as we kind of end our trading battle here, Chris Guzman is the overall runaway leader here as he stands here, kicking, pulling the short gold and the short silver as the great trades of the day. And I hope some of you followed him into those great trades. So I just want to, before we kind of end the show, we didn't get a chance to finish the conversation about targets and not targets. I know that Chris is a great believer in running trading like a business. Chris Pulver, who is much more of what I call trading for return, that is, he has longer term positions and he is willing to give himself plenty of time to let those positions come in. You seem to not really like having weekly or monthly targets. Is that right?
It goes back to how I first started to trade. I came to the market learning how to trade Forex with a daily goal. You know how difficult that is when you know that you have to place a trade today? When you build up that scar tissue of like, I don't like to lose every day. I don't like to force trades.
I kind of do that.
So my point was, I went to probably the far extreme, which is, and obviously I have expectations to win and be profitable, but my plan is to just look at the charts objectively, take the best possible trades, let the setups come to me. I don't need to force trades. If the market's not at a price I want to buy it or sell it, I'm not going to trade it. And so I do a lot of waiting. I let price come to me. But when I'm right, I take advantage of that to the best of my ability.
Okay. No, I'm laughing at my Americanisms that I'm using in Trading Battle. So I was going to say that it's been a super, super fun trading battle today. I mean, really, we got so many great trades, so many different markets, so many interesting ideas come across, and so many different trading styles. So I hope everybody who's watched today's trading battle has gotten some interesting piece of advice. I certainly have. And as I've told many people before, I've actually started to trade like Chris P on an ultra short-term basis. So I'm very much like Chris Guzman, by the way, in case you're interested. It all depends on your personality. If you're the type of person that likes to be consistent every single day and kind of just make small amounts of money every single day, then setting goals is a good idea. If you're a person who looks for bigger, longer, more patient, like I will be the guy who never goes fishing. Chris P, I'm sure you go on a boat and you can go fishing and you'd be very happy. Sure. I will blow my brains out before.
I'd rather go golfing.
Or golfing, right? Whatever. So I think a huge part of it is your own personality, and there is no right answer in all of this, but the answer needs to be right to you personally, and that's the key takeaway, I think, in all of these discussions. Anyways, I hope everybody really enjoyed it. It's been one of the best trading battles we've had, and it was Friday the 13th, not Friday the 13th, but the 13th trading battle on a Friday in a very dead market, and we still managed to do some really good trades and get some positive P&Ls. We'll update everybody, of course, on the longer-term positions. But in the meantime, I wish everybody good luck in the markets. Over and out. We'll see you guys for FOMC week next week, and we'll see how all those trades work out. Thanks again. Thanks very much. I'll see everybody later. Take care.